The time by Caracas is 6 p.m. and this is CBX Business News. The business news headlines are brought to you by QMax Wealth Management, making more possible. Financial risks, Caribbean momentum stalls, and oil prices plunge. Good evening and welcome to CBX Business News for Friday, April 17, 2026. I'm Rashel Moncrieffe. Thanks for joining us. Coming up, Jamaica locks in financial credibility after key reforms, but warns that any slippage could undermine growth and investment flows. Also ahead, the World Bank says Caribbean growth remains subdued even as energy gains provide support. And later, WTI crude oil prices drop 10% as the Strait of Hormuz reopens and supply fears ease. Stay with us as we unpack these stories and more right after the break.
Are you a business owner ready to grow your business through content? Or are you a content creator who is ready to transform your platform for real profit? Then you need to be at Grow Your Wealth 2026, hosted by Learn, Grow, Invest. On April 18th, we're bringing together entrepreneurs, creators, and industry experts for a powerful one-day experience under the theme Grow Your Business Through Content Creation. If you're serious about growth in 2026, this is your room.
The local news is brought to you by Derrimon Trading, better from the start. The Development Bank of Jamaica, facilitating economic growth and development. Caribbean Flavors and Fragrances, tease the senses, and Pulse Investments. Welcome back to CBX Business News. We begin with a critical shift from reform to results in Jamaica's financial system. Jamaica is now moving to lock in hard-won gains after exiting the Financial Action Task Force FATF grey list, warning that any reversal could carry real economic consequences. Speaking at an event hosted by the International Monetary Fund, IMF, on Wednesday, Jamaica's Finance Minister Favour Williams says failure to sustain reforms could weaken economic growth, disrupt investment flows, and increase the cost of doing business.
We are pleased with where we are in terms of the efforts and our standing. We understand the costs of not being there, the cost of being on the grey list and the blacklist as well. It comes by way of our correspondent banking partnership and the increased cost that entails. It also limits business that we would otherwise have been able to do. And so we are committed to ensuring that we maintain the highest level possible, because we know the downside of this, having lived through it, and we would encourage other countries, if they haven't taken this seriously just yet, to begin that process. Because being on the grey list or the blacklist has real financial consequences and business consequences.
That was Jamaica's Finance Minister Favour Williams. Jamaica's small business sector is getting a fresh injection of capital, with National Commercial Bank Jamaica Limited (NCBJ) doubling funding under its SME Growth Fund to $2 billion as it moves to accelerate post-hurricane recovery and business expansion. Speaking at the relaunch of the fund on Thursday, SME Portfolio Manager Kason Morgan says the second phase of the program delivers interest rate cuts of up to 300 basis points. He says under the facility, loans are now available at rates as low as 9.75%, with fast-tracked approvals and access open to both new and existing customers.
In terms of interest rate, guys, rates are as low as 9.75. We are fast-tracking approvals. The program in terms of securitization is open to both secured and unsecured loans, and it's a limited time offer. So the program runs from April to June, but I would like I'm putting out a challenge to the team, right? And to our partners, members of the chambers, and to businesses. Kindly overwhelm us with applications. So much so that the record that was set last year in depleting the funds quickly, that we break that record, and my capable, knowledgeable, and talented leadership team will have that headache of having to make a decision around doubling the amount of funding or extending the promotion.
The SME Portfolio Manager notes the fund targets a wide cross-section of the economy.
We welcome persons in the tourism sectors or any associated linkages. So if you're in accommodation, restaurant, or an hotelier, we definitely welcome. We know those persons were affected earlier in the year. In terms of our manufacturing, the program is also available to manufacturing. So our partners of JMEA can share that news that manufacturing is also available. If you're energy or renewable energy persons, then you can also apply for the program. And we're definitely supporting our farmers, those that are involved in agriculture, agro-processing, or agro-business. The program is also available to those persons, as well as our professional services individuals, or persons that are involved in accounting, auditing, legal services. The program is available to those business services entities. And of course, our transportation industry.
He also revealed that eligibility for the program spans a broad cross-section of businesses.
Who is eligible for the promotion? Well, both existing and new persons, new customers NCB. We welcome our new customers NCB, as well as our existing persons with a track record. They're all welcome for the program. In terms of eligibility, if you're a sole trader, you're operating a mom and pop operation, you can always avail of the financing. If you're in a partnership or a limited liability company, we merely ask that you be registered for 2 years, in operation for a year, or part of a group. And once you're classified as a small or medium, as defined by the Ministry of Industry and Commerce, in terms of your annual turnover being between 15 million to 600 million, you can avail of the program.
That was NCBJ SME Portfolio Manager Kason Morgan. Meanwhile, NCB Jamaica is setting its sight on significantly expanding support to small businesses as it moves to scale up its $2 billion SME Growth Fund. In an exclusive interview with CBX Business News on Thursday, NCBJ Interim CEO Cherie Martin says the bank is targeting at least double the number of businesses supported under the first phase.
Based on the first fund, where we helped over 60 entrepreneurs, we recognize that the demand is great and that this time around we're expecting to double that amount at a minimum. And we believe doubling the value of the fund is indicative of our desire to attract more businesses who need help and to be able to respond to those needs in an adequate manner.
Martin told CBX News that the timing of the relaunch is deliberate, adding that the bank is prepared to extend the program.
Our motivation to launch SME Growth Fund 2 is based on the level of demand that we saw. Also, the country has just experienced a significant disaster, and we recognize that a lot of our SMEs in various sectors have been affected. So the timeliness of relaunching SME Growth Fund is quite apt. And so we're responding to what we're seeing are needs in our country for SMEs to get themselves back on firmer footing coming out of the disaster that we experienced. But also, as we continue to grow the economy and support businesses, a fund like this at a time like this is quite appropriate. And so we're making this particular fund one where accessibility is greater, so that April to June window, we can have a lot of demand coming in that we can satisfy, and if needs be, depending on the volume, extend it even further.
That was NCBJ Interim CEO Cherie Martin. Now to a major capital market move. A new player is entering Jamaica's capital markets, taking with them a proven public track record after tripling the capital deployed across the Caribbean. Qantas Advantage Incorporated has officially launched its initial public offering, IPO, aiming to raise up to 1.5 billion Jamaican dollars, with the potential to expand to nearly 2.5 billion if oversubscribed. The IPO, which opened to investors on April 22 and runs through May 21, will see more than 83 million shares offered at $19.39 each to the public, with discounted allocations for institutional and strategic investors. Speaking at a media briefing earlier today, Qantas CEO Dr. Adrian Stokes revealed the company has increased financing to businesses from just over $30 million in 2024 to more than $90 million at the end of its last financial year.
We have provided financing to a number of different sectors in our economy. And by using securitized assets, we have managed to ramp up the amount of capital directed at businesses, moving from over $30 million in 2024. And at the end of our last financial year, this was heading over $90 million.
He says Qantas has paid out 90% of its earnings as dividends, positioning itself as a high-yield investment coming to the market.
Qantas Advantage has been successful from day one. Since its inception, we have run a profitable organization. For the last financial year, the company recorded a return on equity, and in US dollar term, of over 10%. Importantly, we pay out most of the earnings of the company to its shareholders. So far, we have paid out 90% of the earnings of the company in dividends to shareholders. And we intend to continue this track record. If you are an investor and you're looking for a dividend-paying stock, a dividend-paying company, Qantas Advantage solves that problem. And not just dividend-paying, but attractive dividend-paying.
That was Qantas Advantage Incorporated CEO Dr. Adrian Stokes. We move to the latest updates from the JSE equities. In Friday's trading session, the JSE market activity resulted in the trading of 109 stocks, of which 48 advanced, 35 declined, and 26 traded firm. Leading the winners are Sagicor Real Estate X Fund, Medical Disposables and Supplies, Productive Business Solution USD Ordinary Shares, and AMG Packaging and Paper Company. While leading the losers are G West Corporation Ordinary Shares, 138 Student Living Jamaica Variable Preference, Kintyre Holdings JA, and Mayberry Jamaican Equities. The main index advanced by 3,465.58 points to close at 338,117.29 points. The junior market index also advanced, but by 60.74 points to close at 3,240.62 points. It's time for the Market Education feature, brought to you by CariCris, Regional Ratings, Global Standards. In today's Market Education feature, we're focusing on the term wage. A wage is the payment an employee receives for work performed, typically calculated on an hourly basis. A minimum wage is the lowest rate employers are legally allowed to pay, acting as a government-set floor to protect workers. In Jamaica, the minimum wage is set and reviewed by the Ministry of Labor and Social Security. It is usually expressed as a weekly rate and may change based on factors such as inflation, cost of living, and employment conditions. That was the Market Education feature, brought to you by CARICRIS, Regional Ratings, Global Standards. And that's it for the local news segment. Please stay with us. The regional news is up next. The local news is brought to you by Derrimon Trading, better from the start. The Development Bank of Jamaica, facilitating economic growth and development. Caribbean Flavors and Fragrances, Tease the Senses, and Pulse Investments. Welcome back. And now for the regional business news. The World Bank says economic growth across Latin America and the Caribbean will remain subdued, with the region projected to expand by just 2.1% in 2026, down from 2.4% in 2025. In its latest economic update, the bank says growth continues to be constrained by weak investment, elevated interest rates, and global uncertainty, with GDP per capita expected to show only minimal gains. It notes that while inflation has eased across the region, the pace has slowed, prompting central banks to remain cautious. In the Caribbean, the outlook remains uneven. Guyana continues to lead with double-digit expansion fueled by oil production, while Trinidad and Tobago and Suriname are benefiting from energy-related activity and investment. However, tourism-dependent economies, including Jamaica, the Bahamas, Barbados, and St. Lucia, are seeing more moderate growth as they grapple with high import and energy costs, climate vulnerabilities, and a softer global demand. The report also notes that private consumption remains the main driver of growth, while business investment lags as firms hold back amid uncertainty. The World Bank is urging governments to focus on stronger institutions, improved infrastructure, and workforce development to support more resilient long-term growth. Meanwhile, the Trinidad and Tobago government says global instability, particularly in energy markets, is accelerating the country's economic recovery. Speaking during an interview with the Atlantic Council on Tuesday, Finance Minister Devendranath Thankoo says rising energy prices have delivered an unexpected boost to government revenues, supporting ongoing economic programs.
What is happening as a result, though, is that we are seeing a blip, an upward movement in revenues. Over and above what we expected. We came out of 10 years of depression, 10 years of economic struggle, 10 years of increasing debt, 10 years of difficult managing circumstances, social and economic. Yeah. And we are now seeing the opportunity to see some of the plans and programs that we would have put in place over the last year now being supplemented, if it were, by increased revenues that would have come out of the energy sector.
The minister says the country was already pursuing an energy-led strategy, including expanded gas production, deep water drilling, and partnerships with international energy companies. He notes these initiatives were expected to deliver over the medium term, but current conditions are now accelerating that timeline.
Well, what I can say is outside, we didn't expect this event in the Middle East. What we expected was a continuation of the development agenda that we had set as a government. So we had started negotiating with Exxon, with Shell, with the international multinational agencies. We started doing deep water drilling, things that were not done previously. We had expanded LNG production and gas production as well. So we were operating outside of this incident. And the expectation was that by 2027 and 2027 into 2028, the economy of Trinidad and Tobago, at least the energy sector of the economy of Trinidad and Tobago, which is the largest foreign exchange generator, would have started to pick up and move upwards. We would have been working with the United States in terms of accessing the Dragon gas in Venezuela as well. Those initiatives were outside of this Middle East event. And therefore, all that happened is the Middle East events, which would have given up the increased revenue, as it were, simply meant that we would get to our goal faster.
That was Trinidad and Tobago's Finance Minister Devendranath Tanku. And in development news, the Caribbean Development Bank, CDB, is expanding access to financing for small businesses in Barbados through a new reform initiative. The bank has approved a $560,000 technical assistance grant to support the project, which will be implemented by the government. The initiative will modernize the legal and financial framework, allowing MSMEs to use movable assets such as equipment and inventory as collateral, shifting away from land-based lending. MSMEs account for over 96% of formal businesses in Barbados, but a financing gap of more than 77% remains. The project will introduce a collateral registry, expand financing options, and provide training for financial institutions and regulators. The bank says the reforms should expand access to credit, lower costs, and support business growth. It's now time for news from the Trinidad and Tobago Stock Exchange. Overall market activity resulted from trading in 18 securities, of which 8 advanced, 3 declined, and 7 traded firm. Today's winners are National Enterprises, LJ Williams B, Trinidad and Tobago NGL, and One Caribbean Media, while leading the losers are National Flour Mills, Guardian Holdings, and Scotiabank Trinidad and Tobago. Trading activity resulted in the following movements. The All-TNT Index advanced by 7.06 points to close at 1,361.69. The Composite Index also advanced, but by 3.67 points to close at 942.36. Both the cross-listed index and the SME index remained unchanged at 69.09 and 83.07 respectively. And we take a short break, but please do stay with us. The international news segment is up next.
Are so much book you need for high school?
I'll show you how to make sure you have all the money for my books and even some extra. It's called budgeting, Dad. Making a budget is the most important thing you can do to track your money. It keeps a record of how much you make, how much you spend, where you spend it, and most importantly, how much you can save. Write down all your income, write down all your expenses, see where you can cut down and allot more money to more important things, like saving.
Welcome back. In international news, WTI crude futures plunged more than 10% on Friday, slipping below $84 per barrel to a 5-week low as signs of easing geopolitical tensions triggered a sharp reversal in energy markets. The drop follows confirmation from Iran's foreign minister that the Strait of Hormuz has fully reopened to commercial shipping under a ceasefire agreement, raising expectations that global supply disruptions may be easing. Earlier comments from U.S. President Donald Trump also pointed to potential diplomatic progress, suggesting Iran's concessions could pave the way for a broader deal. Prices declined further on reports that Washington may release up to $20 billion in frozen Iranian assets in exchange for enriched uranium stockpiles, with negotiations set to continue. After nearly 50 days of disruption that constrained global oil flow, markets are now pricing in a gradual normalization of supply conditions. But while global energy markets are stabilizing, the aftershocks of that volatility are still rippling through developing economies. The International Monetary Fund, IMF, has downgraded sub-Saharan Africa's growth outlook, warning that renewed global shocks are beginning to erode recent economic gains. Speaking at an IMF briefing on Thursday, African Department Director Abebe Selassie says growth is now projected at 4.3%, down from earlier estimates as the Middle East conflict drives up oil, gas, and fertilizer prices. Rising shipping costs and disruptions to trade with Gulf partners are also adding pressure. The IMF now expects median inflation across the region to climb by roughly 5% by year end.
We have accordingly revised our growth forecast down to 4.3% in 2026, some 0.3 percentage points below our pre-war projection, and are expecting median inflation to rise to around 5% by the end of the year.
Selassie cautioned that the impact is uneven, with low-income and vulnerable economies facing the greatest strain. He stressed the need for policymakers to anchor inflation and deploy targeted, time-bound support to shield the most at-risk populations.
It is falling hardest on the region's most vulnerable countries, fragile states and low-income economies that depend on aid not as a supplement, but as a critical source of budget financing for healthcare and food assistance in many cases. Against this backdrop, policy priorities to be considered include, in the near term, countries must keep inflation expectations anchored and do what they can to protect the most vulnerable through targeted, time-bound support.
And that warning comes even as the region entered the year on a rare note of economic strength. Sub-Saharan Africa began 2026 on its strongest economic footing in more than a decade, according to the latest outlook from the IMF. IMF African Department Director Abebe Ambrose Selassie says growth accelerated to 4.5% in 2025, the fastest pace in over 10 years, supported by favorable external conditions and improved domestic policy frameworks.
Let me begin with some good news, which is, which needs to be recognized. In 2025, economic activity accelerated across nearly all country groups, with regional growth reaching 4.5%, the fastest pace in over a decade. This was underpinned by a combination of favorable external conditions and, more importantly, sound domestic policy choices. Countries such as Ethiopia and Nigeria have reaped the benefits of macroeconomic reforms, exchange rate realignments, subsidy reductions, and strengthened monetary policy frameworks.
He says those reforms have delivered tangible results, including stronger fiscal positions and easing inflation across several economies.
The results were also tangible in improved fiscal positions, declining inflation, and sovereign rating upgrades in several economies. Inflation has fell to a median of 3.4% at the end of 2025, down from 4.8% the year before. Fiscal deficits narrowed, public debt declined, and current account balances improved. In short, 2025 was a year of hard-won stabilization gains, and policymakers across the region deserve credits for achieving them.
That was IMF African Department Director Abebe Selassie. And that's it for the international segment of the newscast. The news recap is coming up on the other side of the break. And now to recap our top stories. In the local news, Jamaica secures financial credibility, warns reform slippage risks growth. Regionally, World Bank says Caribbean growth remains sluggish despite energy gains. And internationally, WTI oil prices plunge 10% as Hormuz reopens. Supply fears ease. Those were the stories making today's CBX Evening News. On behalf of the entire production team, I'm Rashel Moncrieffe. Thanks for watching CBX, your region, your business, your source.
Hi, I'm Samika Alexander Williamson, founder of Cradle of Life Limited. You're watching CBX, your region, your business, your source.